So the dollar closed lower this week, but so did the S&P. That's pretty interesting. They're usually inversely correlated. Probably has to deal with rates. Let's talk about it. Roll the intro. Traders, what's going on, guys? Welcome back to another Sunday market breakdown. It's your boy Cleveland. Hope you guys are having an awesome week. We had a pretty packed week last week. Okay, so we're going to be talking about some of the fundamental data that came out and kind of how that affected our markets. And this week we got some interesting data coming out as well. High impact video coming out tomorrow. So make sure you guys are there for the fundamental analysis. But this today we're going to be talking about the technicals and seeing exactly how these markets are structured to maybe see if we have any opportunity out there when it comes to the positioning. Okay, so guys, make sure you are subscribed, and if you enjoy the content, like the video for your boy. I appreciate it. So last week, you guys probably know, Fed raised rates, right? So there was a 90% likelihood that the Fed was gonna raise rates on Wednesday, 2 weeks prior, okay? So what's interesting about that is, as you guys know, if it's likely that certain data is gonna come out as expected, you're gonna have markets price in that data before the data comes out, right? So when the data actually came out, what happened? You had the Euro USD surge, you had the dollar index plummet sell side, which is, again, somewhat confusing. If you're new to fundamental analysis, you're gonna be anticipating a market up move, in terms of the US dollar gaining strength. But with the 90% likelihood coming from the Fed fund rate, of course, it's very likely that all that has been priced in already, okay? So just think of it as any investor would. If you think that, if you have some kind of forward projection in terms of some asset, let's say it's Apple stock, and you think that Apple is gonna go up in value, and if the general consensus is that by the time the iPhone X comes out, that Apple is gonna be 10% higher, and the general consensus, again, is about 90% likely that that's gonna happen, you're not gonna buy Apple when the iPhone X comes out. You're gonna do it before then, so that way you can get a good price, and by the time that release date happens, hopefully you have markets priced at the expected earnings, okay? So that's, again, more on the equity side. Here on the FX side, here on the currency side, it's the same thing, okay? So you have different rates and different probabilistic measurements, that all these analysts and economists use to kind of dictate, okay, where should rates go? And for the Fed fund rate for the US dollar last week, it was 90%, giving us that massive push back up into structure. Okay, so right now, dollar index lower, a lot lower, S&P a lot lower as well, right? So why would our S&P slide so monstrously? Okay, we're about to test the bottom of that crazy low that where markets, went somewhat sporadic after all the pension funds liquidated and had to rebalance their books. That's why that massive move happened. Well, that's why many people assume the massive move happened. Why are we now testing that low after a rate raise? Well, you guys can imagine if we're raising rates, okay, you guys gotta remember with these lower rates, our exporters, okay, people pushing product out of the United States could do that at a good price, okay? And there wasn't a lot of money for that conversion in terms of our exported goods. But now that rates are raising, well, now it's gonna be a little bit harder for them to sell certain things because the US dollar and to hold assets in US dollars is gonna be a little bit more expensive, right? So for example, if you were to get a loan for a house, okay, and your interest rates are low, well, you're more incentivized to get that loan, right? But if your interest rates are higher, you're less incentivized to get that loan. That's the same thing for these other economies out there. If they have to buy these US dollars or if they have to buy products in US dollars, then again, they're actually gonna be hit a little bit harder because of the rate raise. And that's just gonna be overall slowing down the economy, whether it's getting leases and loans for cars, financing different things in the economy. Again, gonna be hitting our companies hard, especially all these companies in the S&P 500, the largest companies. That again is gonna slow the economy down a bit, and you saw market participants pricing that in. Now, again, you usually see it have an inverse correlation, all right? Usually, if the dollar weakens, the S&P gets stronger, but right now, that is not the case, right? So I guess right around for the past year and a half or so, there's been somewhat a 65 to 70% correlation when it comes to dollar strength, S&P 500 weakness, but not this week, okay? Not this week. We're gonna have to figure out exactly what that means for us, but I wouldn't say, okay, all the bulls are in for the Euro USD, okay? The Euro has some things on its back as well. Draghi spoke about it 2 weeks ago, mentioning how, hey, the Euro's up here at this price point merely because of factors outside of what's happening with the Euro. And obviously that's, that's true. The US dollar has a major implications on where that Euro U has been driven. But if the Euro cannot slow the stimulus, then of course you're going to see more weakness over there on the Euro side. We'll go over the euro and all the euro pairs and all the euro crosses to see exactly how it's been trading, and we'll do the same thing for the US dollar when we head over into the technical analysis side, okay? So I also wanted to mention the pound. Pound had some major news that came in, and that was mostly involving the Brexit, right? So Brexit seems as if, remember months and months back, probably almost a year ago, we were talking about a soft Brexit or a hard Brexit. A soft Brexit would have meant that, hey, you know, things aren't going to be so harsh when it comes to the penalties that the European Union are going to enact on the UK. And it seems like that's what we're going to get, right? A hard Brexit would have been the opposite of that, where there are going to be a lot of penalties, you know, no free trade, all these different things, but that doesn't seem like it's going to be the case. And not only that, there was a ruling that basically said, hey, you guys got to finish up all your deals and have everything on the table as to what you want by 2019, I think Q2, and the EU just extended that deal for the UK, which is why we saw so much strength come back in for the GBP. Okay, there was no fundamental data that came out. All right, you guys just saw a massive run to the upside because that was a policy meeting. All right, and there didn't have anything to deal with central bankers, so you probably wouldn't have saw it on any economic data. That was all policy, that was all politics, and that kind of shows you how much politics, you know, involve these markets and, you know, can drive directional moves in these markets. Okay, so we'll go over to the pound. We'll check out what's happening there. UCAD had a massive spill last week, mostly due to what was happening with that dollar, but there was also some CAD catalyst also as well to kind of draw our markets around a bit. We'll talk about that tomorrow because CAD has some data coming out this week as well. And obviously, if you guys have any other questions or any other pairs that you want me to check out, let me know, okay? Comment down below and I will take a look, all right? So guys, look, let's head over to these charts. Let's see what we're looking at. When it comes to that Euro-U, it does look like we're gonna pop to the upside. I'm somewhat dovish now on this dollar. Okay, I want to see this dollar sell off a bit. I think there's been a lot of pricing in. We may see a retracement there. Okay, so let's look at all of our US crosses and see where we are. That opportunity is somewhat going on that CAD. If you guys look at the CAD, massive amounts of sell side have come on in. So we'll see if there's something there, but I'm sure it'll be a good week. Okay, so guys, like the video for your boy. I really do appreciate it. And if you are new, subscribe. We'll be cranking out all week long. Let's head over to the chart and see what we got. All right, guys, let's take a look here at the dollar index real quick. You guys can see last week we had a decent sized sell week, okay? And so what we were mentioning before was the fact that, hey, you know, is this the dollar being priced in? Are these little itty bitty up moves the dollar pricing in that rate hike, you know, that was to happen last week? And I didn't think so. I really just think that most market participants already really see that, hey, the rate hike and all the capacities at which, you know, that's going to help foreign bond holders, you know, have a return on these US dollar assets. I don't think that's what they're looking at. I think it's still somewhat of a risk to be investing in this US dollar, regardless of the yield or the interest rate that you're going to be getting on your bonds, okay? So the reason why we saw a sell-off was because I think, again, potentially, yes, you could say that this was a slight push up to the upside where market participants were somewhat trying to price in that rate hike. You could see that there was a few days prior to the massive sell that we see here that happened out from the 24th. There was a few days where you saw some up move going on. And then when we saw this massive push higher here, that's where we were like, okay, wow, there might be some participants looking to really take this thing long. Let's keep an eye out for this structure here. Let's keep an eye, oh, I like it here better. Let's keep an eye out for this structure here to see if there's any kind of test and break. And as you guys can see, it failed. Okay, it failed miserably. So that was right there at the 90 mids. All right, we can see markets ran back down to this consolidated low here. So we're still within that consolidation at the moment. On the weekly perspective, you guys will be able to see that a little bit better, that we do have downside all the way up until the 88.90s. Pretty interesting. I think we can get there by next week for sure. So that might give us an opportunity to catch some kind of, you know, short-term moves to the downside on some of our other pairs. So let's keep an eye on it there. So this is what I was talking about as well. I showed you earlier with the S&P 500. Folks, we're finally testing the low here. Okay, and it looks like we're honestly broken down within the low. And who knows? This week could definitely be a week where we see markets continue to push sell side. Is this the beginning of the end for this S&P 500, right? So if you guys can see, 2 months in a row, we're wrapping up March really, right? 2 months in a row, we're seeing this downside move happen. And these wicks are clearing out price action that took, you know, quarters to unfold, right? So 1, 2, 3, 4 months of price action were kind of eroded within really a 2 days time when that market ended up exploding sell side. Okay, so 1,
to, I mean, that was really the low. You have a little bit more volatility here, and we're heading back to those that same place there. So this is really interesting time here in markets, where again, volatility breeds opportunity. If you can catch this, and if you can play in some of these moves, not obviously here on the equity side, but here on the the FX side, you will be compensated. All right. Obviously, what goes up must come down, and that applies the same for our dollar index. Okay. And so let's see here. So here's our monthly perspective on the Euro USD. As you guys can see, it looks like March is pushing back to the upside. What's interesting as well is that you guys can see that we did have a pretty massive sell side move, which correlated with the S&P 500 for February, but now we're not correlating well at all. And investors are still somewhat frightened by what's happening, where the administration is going, and if tax reform is really going to breed all of that financial stability in that up move that everyone's saying it is. Okay, so if we pull out here, let's go to the fib and let's pull out a little bit, see where we are, and I think we're just about sitting in there. Yep, so we're still sitting here on this monthly support 50% fib level. That's going to be a pretty interesting level to see that if markets can't break past this structure, we will see a push back up into the consolidation, and then it's all about, hey, can we break out of the consolidation? All right, so what I really care about, honestly, is the weekly perspective, because that weekly gives me two really awesome fibs. I got the fib from the low here, and I got the fib here that I can draw up if I remove, blah, blah, blah. So here we go. Drawing the fib from the low to the high. We have yet to even touch the 23.6, and this is the level, folks, that we've been sitting here saying, what the F, okay? I mean, this is a fast market, and for markets to consolidate above the 23 from the low of this entire structure means that this thing is really, really moving, all right? So that's something that's interesting. Obviously, that would have been the target, but we're having a hard time getting there, okay? We're having a hard time getting there. Now, if I pull up in the pull open the fib here, again, from this structure low to this high, you guys will see that we're still hanging around the 23.6 of this move, which again is a fast move, okay? I mean, markets could easily run down to the 50% level, test the 50, and then push back up into structure, but the dollar's not giving us a chance to kind of catch any kind of sell here on this Euro USD, okay? So honestly, what we're seeing right now, we have to pull over to the daily, and once we run to that daily, you'll see that markets, again, very consolidated, not able to break past this structure, and it really does seem like the fact that markets were able to hang above this level, we might get another test of the 25 level, which is really going to send us potentially up into those mid-24s. Okay, so the mid-24s is something I think is achievable this week. That's something that I can look out for. Now, obviously, if there's any kind of catalyst fundamentally that drive us in another direction, we'll play it. We'll play it. But up until then, from a technical perspective, I think that we might see markets momentously continue back up into those structures there. Okay, let's head over to the Aussie real quick and see what we're looking like on that Aussie dollar, because we were looking for some opportunity on the Aussie in the respect of seeing markets hold this trend line. I would have loved to see this trend line get hit, because last week we mentioned, not in last week's video, we skipped over last week, the week previously to that, we mentioned that, hey, structural hit down here in this consolidated area would yield very nicely. And folks, right now with this dollar weakness that's coming to fruition, we might get a sizable Aussie U up move, okay? So Aussie U long is definitely one of the positions that I'm looking out for. Let's keep an eye on it. The structure's still here. We've had the structure drawn up for a while. Nothing has changed around other than we've got a better price, okay? If we can still see just if Aussie can hang around the area a bit and we can see any kind of downside move, then yeah, maybe we can catch some type of opportunity in the area here. Okay, so keeping an eye out for the Aussie. The structure is still the same. We're still waiting on the same move. Let's see what we get. Not much to talk about. All right. Now, GBP USD made a massive run last week. If I pull over, let's take that off, and I'm going to run to the monthly real quick, see where we are. Here we are on the monthly perspective. Again, you guys can see somewhat the same similarities that you saw over there on that Euro U, right? You see the massive up move on that January candle. You saw February retrace quite dramatically, about 70% of that entire move, and now we're easing back within that February candle. So we have an inside move happening from that February low to the February high. It's all about, can markets break outside that February high? Remember, we have a few extra implications here now, though, right? So yeah, we have dollar weakness and the perceived confusion happening when it comes to market participants wanting to buy in on that dollar, giving it weakness. And we also have the pound strength. pound date getting pushed back quite dramatically in terms of that Brexit ruling. Could that break us outside of that structure? Okay. And something we've been keeping an eye on. It did do that for the GBP/AUD. It did that for some of the other GBP crosses. Check out that March, folks. All right. So that's a massive push up into structure there. If I go to the daily, you can see how that news really blew this market out the water and sent it all the way running up into the 83s, okay, from the 78s. That is not a small move. Okay, here's what we're looking like on the weekly perspective there for the GBP/AUD as well. Again, it looks like we might get a little consolidation in the area. We can look for a pullback, but, you know, I don't want to fight the fundamental data. We don't know how much they're going to actually price in that Brexit ruling and how much that actually gives Brexit a chance to, I mean, the UK a chance to really come to, you know, some pretty good terms. Here's the GBP/JPY really quick. How did that affect our JPY? Now, JPY, as you guys know, has had a very, very solid year. Lots of repatriation of capital back into the Japanese currency. Obviously, in a risk-on scenario, you are going to see, I mean, risk-off scenario, you're going to see a lot more money come back over into the Japanese currency, safe haven, all of that. That's what we're seeing here. All right, so you do see a down move. JPY getting priced in a bit, but as you can see, markets did test and push higher. They just couldn't maintain. All right. So I want to find some opportunity here. Let me zoom out a bit and see what we got structurally. NZDU. Check out this NZDU. Now, I actually like the NZDU. Look at all of the volatility to the upside. If I ever saw some opportunity, folks, we're here. Okay. Last week, what we were looking at in the community was the fact that, hey, you know, can the NZD maintain this lower structure? And bada bing, bada boom, we're here and we're sitting, and we have had multiple days of price action in the area. I like the fact that markets have made those wicks to the upside. That gives the new candle a chance to potentially start to see markets trade back up into the level. Now, yeah, massive sell side happening on the end of that candle there, but that doesn't really mean anything to me. I would like to see markets, again, continue to maintain, and then once I get that market to open, all right, on in the next few hours or so, the next 2 hours and 30 minutes to be exact, then yeah, I would really like to see, again, a continuation back up into structure. Now, where will we go? Well, here's our monthly perspective, our weekly. Well, we're seeing here at the 38.2. Could we get a test of that 23.6? Okay, if we got a test of the 23.6, that would give us about an 80 pip opportunity or so, and that's just target one, right? I mean, I'm not saying we could trade all the way back up into the 0% level, but I definitely think we can make it to 73.50. Okay, so 73.50 seems like a decent area that we could see markets run back up into. I could see lots of price action in the area kind of telling me that, hey, we've had a hard time breaking higher, but I also see a lot of price action in the area telling me, hey, it's not, you know, irrational to believe that markets could trade up into me, so I would love to see it. Okay, I would love to see markets trade right back up into that area. If I had to draw it up in terms of a zone, here you go. Okay, so let's see what we get. Let's hope markets can maintain that price area, and if we get any kind of USD weakness, then yeah, we'll definitely see that market trade back up into that structure. So NZD looks pretty good. AUD USD, again, looks pretty good as well. I like to see those two structures there. Let's pull up in that USD CAD to see what we're looking like. Remember what happened last week, folks. We actually did break outside of a very strong resistance that was left, you know, after the 2017 run, after these massive sell-side moves happened. Remember, Canada raised rates way more than expected, and then you saw a pretty decent size resurgence of capital come back in. Now what's technically happening is market participants are a little bit nervous that Canada won't be able to keep up with the USD rate raise, and so we saw a massive liquidation of the Canadian dollar there. Also, tariffs, that didn't help. I don't know how much of that really got priced in here now that we know tariffs aren't going to be a part of Canada. Okay, Trump excluded Canada from that. But again, still, you know, to see markets break the high gives us a chance to continue and to see markets consolidate in the area. So right now we saw markets retest this structure. This again gives us another situation where if we get markets to continue to consolidate around this price area, you actually might get a continuation. Okay, so you're going to have two places that markets can really run down into. If you're not putting entries here to go long, the next place you think that, hey, the best place for entries would technically be all the way down here near the 26s. Okay, yeah, you could say the 27s as well, but, you know, again, that's somewhat of a weak leg. Really, the 26 highs, 27 lows is really where you would want to be. Okay, so honestly, this entire general price area here is something that you can look out for. If I was to activate this up and kind of say, here you go. if you get an entry, honestly, anywhere within this area here, 1 second, jeez Louise, boom, anything within this area here, I think you got a good price. Okay, I think you got a good price, which means we're still waiting on it to trade back down into that area. It looks like it'd be around a 38.2, maybe nearing even a 50. Okay, so yeah. So honestly, anything around the 38.2 might be a good area to catch that move up. And obviously here as well as the 50, it just really depends on, you know, what the volatility looks like around this time. But potential U.S. CAD sell side, you know, a little bit more potential U.S. CAD sell side. This also agrees to the fact that the U.S. dollar may still get a little bit weaker. So it looks pretty good, all right? So those are our U.S. dollar crosses. AUD USD looks pretty good. NZDU looks like something that we're probably going to end up playing this week for sure. And USD CAD, hey, can we get a little bit more sell side potentially? Maybe some breaks, you know, maybe some consolidated breaks, some kind of trend line breaks down into that structure. Who knows? All right, let's head over to the crosses, the exotics, and the miners to see if there's any kind of opportunity here. As you guys can see, Aussie across the board was gaining a decent amount of strength. Okay, here's our Aussie CAD, decent amount of strength there. Aussie JPY, something there as well. Sorry, weakness there as well. And so again, even here, Aussie NZD, Aussie not doing so well last week. Okay, and even here on the Euro AUD, you can see that again, Euro AUD pushing to all-time highs, kind of showing you as well that Aussie dollar did not perform so well, right? So will that trend continue? Okay, if that is the case, then we should see that USD AUD, AUD USD kind of hit back off in that lower trend line there. Pretty interesting stuff. Other than that, folks, when it comes to the structure, I don't really see much. Okay, I don't really see much. The Euro CHF has been something that has been somewhat perplexing, right? I mean, you've seen markets run sell side, consolidate at the low, and then pushed back up into that area on a very, seems to be weak leg. Okay, so again, in this scenario, if we get any kind of Euro weakness that plays out based off of some of the Euro data coming out this week, guys, remember, guys, make sure you watch High Impact tomorrow to see what's going on. Will we have markets maybe retest this base? That's something that we could potentially see. And outside of that, though, don't really see too much of a structured move. The trends haven't even really fully played out yet. A lot of consolidation at the moment. If we were to keep an eye out on this Euro AUD on potentially a daily perspective, you know, even here, maybe you're playing some breakouts long on an intraday move. Okay, so you maybe play on that 30-minute, maybe only 1 hour, but, you know, from the daily perspective, not much. We kind of really ran the gambit on all the daily opportunity. Obviously, intraday can give you anything, anywhere. You just need that right setup, right? So when it comes to the exotics, Euro CHF structurally looks pretty good. Now, fundamentals tomorrow will give us directional bias. That will kind of help us hone in a bit on exactly what we want to see. So make sure you guys come out there, and obviously, guys, click the link below. We're actually coming out with a cool little, quick, maybe about 30-minute video called the 7 Tips to Profitability I came up with. So make sure you guys watch that. And of course, if you guys have any questions, please let me know. Head over to see the 7 Tips to Profitability. It might be a waiting list. If it's not there yet, you'll get access to it in a few days from now. And other than that, folks, hope to talk to you guys soon. Let's have an awesome week. Let's see what we get. Okay, your profit, always my motive. See you guys tomorrow.